A warm welcome to Business Daily right here on Trust Television. I am Yusuf Akogu. Let's take the business top stories. Glad to have you back. Now, before we go to the stock market, let's give you the breakdown of what Nigeria used to spend, Nigerian government used to spend on presidential air fleet in the last 13 years. In 2011, 17.9 billion naira was spent on maintaining the presidential air fleet. In 2012, it came down to 3.5 billion. In 2013, it moved to 7.5 billion. In 2014, 7.97 billion. In 2015, it came down to 5.19 billion. And of course, in 2016, it came down to 3.6 billion. In 2014, there was an increase of about 1 billion as well, as it moved to 4.37 billion. In 2017, it moved to 4.37 billion, like I said earlier. In 2018, it moved to 7.2 billion. In 2019, about 7.29 billion. And of course, in 2020, 8.510 billion naira. In 2021, 12.6 billion. And of course, in 2022, 12.4 billion. And of course, currently in 2023, we've so far spent 25.7 billion naira. If you look at the total spend for the 13 years, is 123.917 billion. I also recall that in the supplementary budget sent to the National Assembly, the president requested for 5 billion naira for that same presidential air fleet. If you look at the net allocations to Delta State from the month of January to June, that is just around 96.03 billion naira. This is a state of over 6 million population, and this is the allocation they've gotten in 6 months. Very, very low compared to what we used to maintain just the presidential fleet. All right, let's go to the stock market and see how the data are actually doing today. Of course, the market closed negative yesterday, 0.76% downward there due to profit taking apparently. 525.457 million of volume of shares, value at 6.088 billion naira in a days of 8,396 exchange hands among investors on Thursday. Let's look at the top gaining equities. The top gaining equity, we have Omatech. Omatech gained 10% there to close at 55 kobo per share. Academic Press also gaining 9.83% to close upward at 1 naira and 90 kobo per share. Of course, Tantalizer gaining 9.76% to close at 45 kobo per share. Then look at the top losers. The top losing equities, of course, Sham PLC is there today, 9.48% to close at 2 naira and 20 kobo per share. International Brewery down 8.79%, 4 naira and 15 kobo share prices closed on Thursday. RT Briscoe also closing downward, 8.51% down, and of course the share price 43 kobo per shares. Let's look at how the market went in terms of market movers, and of course the top trading equities. Japan Gold and Ventures closing positive. Topping the volume there, the activity chart there. 92 million volume of shares were traded. Fidelity Bank 67 million volume of shares, and of course United Bank for Africa traded 46.3 million volume of shares. How is this reflected in the sectorial performances? Let's look at the sector performance. Of course, the banking sector is down 0.85%. Apparently, profit taking. Of course, 2 days ago, recall, on Wednesday, the Nigerian Stock Exchange crossed the 70,000 psychological mark. First time in the history of the country. So investors are indeed cashing in on that, and of course, taking profit from their investment. The industrial sector is back. Today, it was dormant for a couple of days, but it's back today, but on the negative side, 0.65%. The consumer goods also down there, 0.19%. The oil and gas sector has remained dormant. What is happening to the oil and gas stocks in the market? We'll find out in a couple of later on in our discussion. Also look at the insurance sector, the highest gainer, 1.56%. Let's look at the rest of Africa and indeed to see how they are doing. In Joburg climbed back yesterday. It was less than 69,000 basis points yesterday. It climbed to 71,000. Apparently competing with Nigeria there. 0.52% it gained. Of course, GSE in Ghana, of course, gained 0.09%. The all share index there, 3,131.47 basis points. And of course, NSE in Nairobi, Kenya, continue on the BS run, 0.72%. Again, it lost odd at the close of market on Thursday. These are the highlights of the stock trading as it went down across the continent on Thursday. So we'll take a very quick break now. When we return, we'll look at how CBN is clearing the backlogs of our forex. Don't go away. Glad to have you back. It's the Business Daily right here on Trust Television. Now we go into our discussion. We're looking at the forex market again today. The CBN said they have started clearing the backlogs of FX that we have in the country before the coming of this new government. What does this mean for Nigeria, and how relieved are we going to be having to clear all those backlogs that some say have affected the growth of the economy for a very long time? I have joining me from Lagos a financial analyst, Muktar Mohammed. Good morning, Muktar.
Yusuf, nice to be on your program this morning.
All right, it's our pleasure. Let's help us make a sense of all of this. When CBN say they are clearing the backlogs of FX, what do they really mean?
Well, it actually means that we're owing some people FX backward. I mean, what it's supposed to be forward payment. And so they are doing that. That has been what is responsible sometimes for the liquidity crunch that we see, especially in the banking space, where a lot of customers have not been able to have access to their FX sometime, and then banks were not able to give a lot of their customer FX, especially for things like school fees and basic traveling allowance. And so it's a good thing for the market. It's a good news that finally we are beginning to see CBN match their words with actions.
All right, what does it really mean if they are doing this? What impact will this have on the economy? How relieved are we going to be as a nation when we do this?
Yusuf, we are trying to save the naira. That's what we are trying to do by what we are doing. So we are just trying to save the naira, and definitely if we bring liquidity into that space, the naira will be saved. And once the naira is saved, and when I mean save of the naira, is to make sure that the price between the parallel and the foreign exchange market can converse. And once it converse, remember that a lot of goods and services have gone up because of the exchange rate volatility. We'll see a stabilization, and then we'll begin to attract investors into our economy. A lot of investors want to come, but they want to see the two-way exchange system. So I think what the CBN have done is to create confidence and say, look, we are back to business, our economy is picking up. But even if we still have doubt about how the 10 billion was collected, how it was collected, payment of the, we've not got an explanation for CBN. But all well said and done, I think what is good is we have them paying off some of this backlog, that which will in turn boost liquidity in the FX market, and we could see the naira gaining both in the primary and in the secondary market.
All right, talking about naira gaining now, let's still look at this CBN action, because a lot of Nigerians will want to know really how will this strengthen the naira, because you're actually paying the dollars that you have out to foreign companies.
Well, like I said, those nairas, those dollars need to be paid, because that has affected liquidity in the system, and that is one. And two is how would that affect the ordinary Nigerian? Is that by the time we pay off this, we'll get liquidity into the system. In that, even if you are paying these dollars to these foreigners, that means the pressure on the parallel market will drastically reduce. And this will now bring confidence in the economy, and foreign direct investors or portfolio investors will want to come. We must not forget that these people that they are paying dollars, most of these banks they are investors that have invested their dollar in the Nigerian economy, but they've not been able to repatriate it ever since. Some of the banks are being paid in terms of their dividend payment that they should have received thus far. So definitely that is a good thing for them to do, so that by the time we bring the exchange rates down, then the cost of goods will definitely come down, especially those imported goods, and that will begin to create bring down inflation also. So it's a tools that we've always talked about, is address the FX, and then all other variables will become stable.
All right, so in a way, we're actually, trying to address our foreign exchange obligations.
Exactly.
All right, let's look at the information coming from the JP Morgan. They are projected that by December this year, about a month from now or thereabout, naira may be trading at 850 to the US dollars at the official exchange market. What do you make of that?
Well, we've seen it go to about almost 1,000 naira in the official exchange market, so 850 will be good. Do you remember the government also have come out and said, look, the true value of the naira is between 650 and 750. So they want to achieve this by December. And remember, this same JP Morgan state of recent that we're going to see naira cross to about 1,000 something. and that did happen. So when they are saying that it's going to be 850, then we may have to take them serious. Or the government saying that they will make sure that it comes to 700. I think it's an upplay tax. I believe definitely that the true reflection, the true exchange rate of the naira is not 850. Naira is 1,350. I stand with the government in the area between 650 and 700, which I think is the good exchange rate of the naira. So definitely, I think that will happen. On the side, whether it will get to 750 before the end of this year, I doubt much. Getting to 850 like JB Morgan projected, I think that will happen. But on the government side, I think we may have to wait till next quarter next year to see that magic happen.
All right. Is it not just enough for government or JP Morgan to project? What do we need to do to even achieve that, to get to that?
Well, you see, we are doing what we have to do. Number one, we need to earn more. And again, remember that our crude oil output has gone up, so we are earning more now. We need to, Nigeria in the diaspora, we need to create a window whereby they will start remitting dollars into our economy. Once we create that stable exchange rate, they don't need to go to the parallel market. They will begin to remit directly to the market. Foreign investors will want to come. Portfolio investors will want to come when you have a stable exchange rate. And so those are the four basic things that we need to do. And then before we do the other things which may have to do with non-oil sector, trying to boost other sector to earn effects into the economy. But let's first address the challenges that we have with the sector that we normally will earn effects from. And so for me, I think it's definitely it's a definite thing that we'll get to between 850 before the end of the year, but I think by next year, the naira will definitely stabilize to about 700, 750.
All right, talking about doing what we're supposed to do, the government is also, seeking to borrow more money again, 7.8 billion, and of course, 100 million euros loan has been requested by Mr. President. Do you think it's still part of what we're supposed to do?
Yusuf, it's Warren Buffett that said that if you're in a hole, you don't have to dig another hole. You need to see how you can come out of the hole.
Absolutely.
We're already in a hole of debt, and it seems that we are digging on that hole to get more into debt. I don't think that should happen. We've always canvassed for the PPP, public-private partnership. So what are these projects? Is it that we cannot get the government using their projects as a collateral, get the private sector to come in, do those projects, and give them a return to run that project for the next 20 to 25 years. And then you collect tax from them. And after that, you think of the prosperity of the next government. But you see, most government have not think out of the box. They will never try to think out of the box because this.
No, we have Muktar there. Okay, it appears there's an audio challenge there from Muktar. We hope that we get him back as quickly as possible. He was talking about the Nigerian debt profile. Of course, the president has requested to borrow $7.8 billion, an additional 100 million euros. That is expected to push Nigeria foreign debt to 51 billion naira if indeed the Senate approve that request from Mr. President. And if you look at the current debt profile, about over 87 trillion naira, if you add the ways and means to it, that is actually a very huge deficit that government can. All right, I think we have Muktar back. Muktar, continue along your thoughts.
Like I said, I think we can't continue to begin to look at debt as a solution to our problem. We need to look at the PPP. Like I said, if you are in a hole, you don't need to dig more hole. You need to come out of the hole. So if you are digging more hole, that means you are going right deep into it. And I think we are digging a hole for too much debt. I think it's time the government begin to look, think strategically and think inwardly on how to solve this problem. The situation where we just, every solution to our problem is to go hand in cap in hand, looking for people to give us debt, to borrow us money, I think should stop. And again, we need to see what this project are all about. The president have listed a lot of things that this project we're going to achieve. Hopefully, we'll see funds tied to this project. Hopefully, we'll see this project begin to generate money, money to be able to pay off. Because if you are borrowing in instant, if you are a business, you are borrowing, then you should be thinking of how the business can generate the fund to pay off the debt. So we should start thinking of Nigeria as an entity, as a business entity. And so when we are borrowing, we should begin to look at it. How will this benefit the economy? How are we going to pay? Will this project be able to generate the revenue to pay off the debt? So that is what we should be thinking as a country, not because you want to do a project so that people will clap your hand. Like for you, like what we saw in the previous administration, pride themselves to be one of the largest in terms of infrastructural development. But at the end of the day, you saw the kind of mounting debt situation and the kind of battering of the naira we have seen because of some of their policies. We need to be very careful.
All right, we need to be very, very careful because borrowing is also a burden that Nigeria cannot bear it at this time, just like Muktar actually said. Let's still look at the recommendation from JP Morgan. Again, they also talked about a tighter monetary policy, of course, more appealing interest rate and favorable FX levels as a way for us to strengthen our naira. Do you agree with this tighter monetary policy at this time?
I don't agree, and I keep saying it. What happens in other economies is different from what happened in our economy. When we have situation that we are in now, it's not just supply destruction. It has a lot to do with macroeconomic instability, price instability, and other macroeconomic activities that have not really hit the ground running. So when we begin to do copy and paste like what we have done before, increase rate, the challenge has not been rate increment. And I'm happy that the government, the President CBN, the management team are beginning to look at it, that the challenge we have with Nigeria is not rate, is not by we increase the rate. The challenge is that address the FX challenge. Once you address the FX challenge, you are addressing inflation. And then with that alone, you also begin to address other areas. So I don't believe in rate hike, and I've said it over until I've said it in your program. We need to begin to look at homegrown solution to our economic situation because the foreign solutions have not really helped us. We need to begin to look inwardly.
Let's also look at another recommendation by JP Morgan. They also talked about regulatory limit on FX net open position for commercial banks and exploring the introduction of a cash reserve ratio on FX deposits. This issuance of dollar-denominated, the issuance of dollar-denominated asset onshore is also suggested. What do you make of this?
I think I agree with that. Recapitalization in the FX level, especially for banks. If we do that, Yusuf, that will be a game changer because what it means is that banks will be highly capitalized in terms of FX and they will be able to intervene in the market just as CBN too can be able to intervene in the market. And I totally agree with what they have said now. It's a policy that are workable. These are once any issue that the World Bank put in terms of addressing FX is a solution to our challenge now. Because once we are able to address that, we've addressed 80% of our challenges.
Indeed. Let's look at another advice again from them is to mandate all taxes to be paid in our local currency.
I think that is, that is not supposed to be a recommendation. That should be normal what is obtained. You can't go to America and you are paying doing business in America and you are using pound. You have to take the pound and change to dollar. You can't go to UK and you are using dollar. You have to take the dollar and change to pound. So I think it's a mindset that Nigeria have asked, especially in Lagos, where some people are being asked to pay for houses in terms of dollar, and nothing seems to happen. Even the airline companies, the Nigerians are beginning to pay their airfare by dollar. So definitely, I think if they say they want to do that, what they need is enforcement of what already law, because ordinarily we're a sovereign nation. We're supposed to do trade with our own currency. I think it's a good thing that JP Morgan have brought that to the suburb.
All right, Muktar, as we wrap up now, let's look at our capital market. The market has been doing great in recent times. You recall on Wednesday, the market crossed the 70,000 basis point psychological line. It's the first time we are actually getting to that point. What do you make of that milestone?
Fantastic milestone, commensurate with the company's result that came. And you've seen, especially the financial sectors, you have seen the earning per share hit above 10 naira. We've seen the results that have come out even from companies that we thought they would struggle. Like you said in your report, your top market reports, a company like Japan Gold also seems to be coming out of the wood despite the FX challenges. We can see the manufacturing sector also making a lot of drive, even if that most of them were in the red. But definitely, when you look at their profit because of the exchange rate volatility, you saw that eating into their profit, and they are not. But going forward, when the stability, will begin to see these numbers coming. So it's a good thing, and I think I'm very, very excited about what we have seen. And hopefully, I just think we'll continue to see that, because the result we have is enough to match with the numbers that we're being given by this company. That's one thing that gives me joy. Comparable to 2008, when we have result not commensurate with price.
Or just in 30 seconds, do you think we are well positioned to compete with a market like JSE in South Africa?
Well, we need to deepen our markets if we want to compete with them. I think we can do that, but we need to deepen our market. We need to bring in the big players in Nigeria economy. We need to see not only MTN, we need to see Shell, we need to see Chevron, we need to see other big players. We need to see Globacom also come to the stock exchange. A lot of big players that are actually the key driver of the Nigerian economy need to come to stock exchange before we begin to think of we can fight it out, or we can be better than the Johannesburg Stock Exchange.
All right, Muktar Mohammed, financial analyst, I must thank you for your time on Business Daily today. We appreciate your contribution.
Thank you. Thank you for having me.
All right, with that is a wrap on the show today. We'll be back on Monday. I am Yusuf Akogu.